This is Eric Muathe, Muathe.com. All is well. Let's take a look here with the markets pretty much moving the NASDAQ to all-time highs. We are seeing a lot of stocks, and I mean a lot of stocks taking off. Let's take a look at an example here, and in this educational video, I'm going to be talking about this understanding that any major move is going to have multiple entry points, depending on whatever concept, whatever strategy you are using. Let's take a look at a stock here that has done well. We can see as of May, the stock has moved from about, with this breakout here, let's call it from about 3 to the highs of just under 9 or touching 9. That's a very desirable move. Now, first and foremost, let's address the initial breakout, which is here. This breakout right here in the middle part of May. And to do that, let's take a look at the monthly. And what I have here in front of us is 4 years of weekly data. And the reason why I'm showing you 4 years is because our concept, our method, our minimum requirements do need 3 years of data. And so in order to show that the breakout met the minimum requirements, I've gone back 4 years. So we are talking about this breakout right here in May. So our interest is to figure out whether that met the minimum requirements. And let's do that quickly. And of course, I'm talking about the minimum requirements for the ultimate Muathe breakout, my own original method that is here to serve you freely. All you have to do is spend some time understanding it. Now we can see there's a price breakout. Now remember, the breakout strategy pretty much negates all this area. We don't care about timing here. We only care about timing when we see momentum, with the understanding expectation that the entry is just above the breakout level. In this instant, we are using the prior monthly closing high as our buy point, which is the close on a monthly basis from February. Now let's test the ultimate Muathe breakout. We can see as of May, the RSI was moving to 3-year highs. So really that is confirmed right here. We can take a look at the MACDs. Remember, only one of the MACDs needs to be breaking out. And to be clear, we are taking a look at this from the month of May, which is right here. And we can see that both, if not one of the MACDs, was moving to 3-year highs. So minimum requirements met as far as the ultimate Muathe breakout is concerned. Good. Now, in terms of what I was talking about, multiple entry levels. So if you missed the initial breakout, and chances are very high if you're playing momentum that you will miss the first breakout. Why? Because it is this initial move that actually attracts you to the stock. So you'll tend to miss some breakouts, especially given the fact that this move here comes out of nowhere. The stock had been sideways for a while, as you can see, for almost 2 years. In fact, you can even go back. The stock had been sideways for a long time, going back as far as 2016. And here we have all data for the stock so we can understand what is going on. Now, notice there is a period of sideways action. We'll call it somewhere around, it's a huge period. You're talking about a lot of commissions generated by the instrument from about 2014 to about right here, which is May of 2020. Now these are years of pretty much nothingness, and yet you want to be available to capture some of this massive move here, which has seen the stock triple in price since May. So avoid this. Get yourself as close as possible to capturing some of this times 3 move. And the best way to do it is one of the beauties of playing breakouts right here. So avoid this. At the same time, you would have avoided this because there's no breakout. So saving you what? 10 years of price action? 2010, 2020. The only time this instrument was showing some superior life, and I'm not talking about opinion, I'm talking about fact. The fact is, the most recent move is the most desirable. Now, if you missed the initial breakout, as I just stated, it's not the end of the world. So you missed this breakout here on the monthly chart, and you can see since that monthly breakout, we haven't seen any type of rest, no down months on the monthly chart, which brings us now to how any major move is going to have multiple entry levels. So on a weekly chart, we can say we missed this initial breakout as an example, but there's always going to be more. And here comes the adjustments. What you do, you find the next pause, which is this weekly closing high, and you use that as a future breakout, and you can capture the entry right there at a price of about 4 and change right here. So that's your second entry on a weekly chart right here. And this is after a couple of weeks of consolidation. And so let's take a look at where we first get an interest. This is July 10th. I sent out a breakout alert for the stock, which was here. The buy point was at 4.23. So on a weekly chart, it is this breakout here. So remember, if you understand the simple minimum requirements, you can do this for yourself too. So there's a breakout right there. Now the next breakout is here, and this is in the middle of August, and that was at 5 point something and change. So that was the next breakout, and again after a couple weeks of rest, which is this rest period right here. It gives you another opportunity in the, let's call it $5 and change. Let's take a look at that breakout alert. And that breakout alert was sent to my paid subscribers right here, July 11th. And that was at a breakout, future breakout, when it moved above 5.67. Now, it also means there's a lot of work that needs to be done in tracking these things. And there's some, amount of energy expended in making sure you don't miss future breakouts, because there's so many good stocks moving. I mean, it is just a full-time job to shift through and figure out which ones are going to gain the most, because all of them are moving, as the market is pretty much at all-time highs as far as the Nasdaq is concerned, and S&P 500 too, which presents a lot of candidates to choose from. So as I'm saying, some type of system needs to be developed by each individual as to figure out where there's a rest period. As we can see, 2 rest periods here, giving you a breakout opportunity here and here. Now, because there's a lot of stocks moving, not all of them are superior movers. And one thing I've been trying to explain over a period of many videos recently is this idea that we also do need to account for the sector. That's also another important ingredient, and you can see here this instrument happens to be the second top performing sector in the services and educational sector, or educational services sector. And of course, if you've been paying attention, this has been also a great moving instrument, and an alert was sent for that one a couple of months ago. So minimum requirements in terms of the chart, and also sector performance is an important consideration. All this you can do for yourself if you know what you are looking for. Now, one final quick observation is to take full advantage of the market opportunities. It also needs good understanding of the power of RSI 69.1, as you can see on the weekly. And there was also a recapturing of RSI 69.1, and you can see the result of this movement above 69.1 on the monthly. It's pretty much straightforward. Once the RSI moved above 69.1, you can see the pickup in momentum, and also an understanding and timing of this concept of RSI 69.1 can also increase the odds of success, because in truth, this is the sweet spot in trading, and momentum trading at that. Another original concept by yours truly, Eric Muathe, Muathe.com. Love and light, light and love. Namaste.